Stop scrolling. I'm about to show you a company that makes the technology inside India's fighter jets, its most lethal missiles, and its satellites, and almost nobody in the retail investor community is talking about it properly. Data Patterns India. This is a deep dive that could genuinely change how you think about the defense sector. Stay till the end because the valuation twist at the end is something most analysts are getting completely wrong. Let's go.
First, who the heck is Data Patterns and why should you care? 35 साल पुराना कंपनी, डिफेंस इलेक्ट्रॉनिक्स में इंडिया का सबसे वर्टिकली इंटीग्रेटेड प्लेयर। तेजस में है, ब्रह्मोस में है, सैटेलाइट्स में है, पूरा इकोसिस्टम कवर करता है।
Now let me hit you with the names. LCA-Tejas, India's homegrown fighter jet. Data Patterns is in there. BrahMos missile, one of the fastest cruise missiles on the planet. Data Patterns supplies electronic subsystems. The light utility helicopter? Yep, them again. And in March 2026, they just bagged a fresh 288 crore rupee order from the Indian Meteorological Department for 32 Doppler weather radars. These guys are literally everywhere. When you buy this stock, you're buying a bet on every major Indian defense platform simultaneously. Let that sink in.
Now 6 reasons why Data Patterns is almost impossible to replicate. Number 1, vertical integration. They do hardware, software, firmware, mechanical design and testing all in-house. Most defense companies outsource half of that. Number 2, they own the IP. They are not a contract manufacturer building someone else's design. They own the blueprints. Number 3, 35 years of government trust. You can't fake that. Security clearances, DRDO relationships, ISRO contracts that took decades to build. Number 4, Atmanirbhar Bharat. The government has literally mandated buying Indian. That's a policy-backed structural tailwind for the next 10 years minimum. Number 5, zero debt. Completely debt-free. No interest burden. Every rupee of earnings is clean. And number 6, they just use their QIP funds to build next-generation electronic warfare products. They are investing ahead of the curve. Tell me a competitor who can match all 6. I'll wait.
Look at this revenue chart. Q1 FY26 99 crore rupees. Normal. Q2 FY26 307 crore rupees. That is a 238% jump year on year in a single quarter. The market went absolutely berserk. Now before you panic about Q3 dropping back to 173 crore rupees, stop. This is a defense company. Revenue doesn't flow evenly. It comes in big chunks when milestones get hit and contracts get delivered. Q3 was still up 48% year on year. The full year picture is what matters. And on that basis, the 9-month revenue is up 86%. 86%. That's not a good business. That's a great one.
Let me give you the scoreboard for the first 9 months of FY26. Revenue 580 crores, up 86% year on year. Net profit 133 crores, up 23%. Order book sitting at 1,868 crores. That order book is nearly 2 times their annual revenue, meaning they already have visibility into most of FY27's earnings right now. And management have guided 20 to 25% revenue growth for the next 2 to 3 years. If they deliver even half of that, the compounding here is ferocious. Now here's what separates Data Patterns from every other defense company I've ever analyzed. Their normal EBITDA margin is 44 to 46%. 46% EBITDA margins. For context, most manufacturers would kill for 15-20%. This is because they own their IP. They don't assemble, they design. High design value, high margins. Q1 FY26 में margins 2.3% गिरी, एक low margin strategic contract था, one time thing. Ignore it. Normal quarters में 44-46% EBITDA. That's extraordinary. ROCE is 22.5%. ROE is around 16 to 19%. Zero debt. This balance sheet is cleaner than most retail investors' portfolios.
Now straight up, this stock is not cheap. 75x PE, 52x EV/EBITDA, price to sales 19 times. हर metric पे expensive लग रहा है, कोई doubt नहीं. But 25% net margins, zero debt और एक government जो literally law बना के बोल रही है buy Indian defense products. ये tailwind manufactured नहीं है, ये policy backed है. तो रियल क्वेश्चन ये नहीं है कि ये एक्सपेंसिव है, रियल क्वेश्चन ये है कि क्या ये प्रीमियम जस्टिफाइड है. एंड ऑनेस्टली फॉर दिस क्वालिटी ऑफ बिजनेस, हाँ, मोस्टली यस. But at today's price, analyst consensus target is only 2% away. Near-term upside almost nil hai. So the stock is great, the entry needs to be right. Now look at this order book chart. FY23 680 crore, FY24 990 crore, FY25 1350 crores, and right now Q3 FY26 1868 crores. Straight line up and to the right every single year, and that order book is almost 2x their annual revenue, meaning FY27 की काफी earnings already locked in है. Visibility बहुत strong है. अब नियर टर्म कैटलिस्ट सुन लो, IMD से 288 करोड़ का डॉपलर रेडार कॉन्ट्रैक्ट अभी आया है. QIP फंड से डेवलप किए EW प्रोडक्ट्स के 2 बड़े ऑर्डर्स पाइपलाइन में हैं. और अगर ब्रह्मोस इंडोनेशिया डील क्लोज होती है एंड इट्स लुकिंग लाइकली, डेटा पैटर्न्स डायरेक्ट बेनिफिशियरी है. मैनेजमेंट का गाइडेड पाइपलाइन 20,000 to 30,000 करोड़. हाँ, इट्स एन एस्पिरेशनल फिगर, बट एड्रेसेबल मार्केट का साइज तो पता चलता है ना. अपॉर्चुनिटी मैसिव है.
Now here's the story the chart is telling you. July 2024, all-time high near rupees 3,900. Then the brutal fall, 8 months of pain, all the way down to rupees 1,350 in March 2025. That's a 65% drawdown from peak. Absolutely savage. But then something happened. Fundamentals kicked in. Q2 FY26 results dropped. Revenue up to 38%, profit up 62%, and the stock exploded. From that March 2025 low, this thing has rallied over 158%. It broke its long-term downtrend with conviction. The bears got wrecked, and now it's knocking on the door of its all-time high again.
Let's run through the indicators. RSI at around 60, that's not overbought. There's room to run to 70 plus before it gets stretched. MACD is positive and pushing higher. Momentum is on the bull side. ADX above 35. The trend is strong, not fading. And on balance volume is bullish on both weekly and monthly charts, meaning money is flowing into the stock, not out. The moving average aggregate rating on TradingView is strong buy. Now the one number that should make you cautious, beta of 2.92, almost 3 times the market. If Nifty falls 10%, this could fall 25 to 30. High beta is a double-edged sword. Key levels to watch: 3,250 to 3,300 rupees is your first serious support. 2,900 to 2,950 is where the real buyers will show up on any deeper dip. Now, this is the section most channels skip. 6 risks, 6 catalysts. Let me rip through the risks fast. 1. Revenue lumpiness. This is a quarterly roller coaster. If you can't handle wild swings in reported numbers, this stock will give you anxiety. 2. At 75 times PE, if they miss earnings even slightly, this corrects 30 to 40% fast. 3. 307 debtor days. The government is a slow payer. Working capital is constantly under stress. 4. Defense capex growth in FY27 is expected to be only 5.2%. That could slow order inflows. 5. Everything depends on government procurement cycles. If budgets shift, revenue shifts. 6. Beta of 2.92. Market crashes hit the stock hard. Now the catalysts. India's FY26 defense capex was revised up massively to $2.2 trillion. The BrahMos Indonesia deal is live and Data Patterns is positioned to benefit. They have 2 large EW product orders in the pipeline. Tejas Mark II and the AMCA program are decade-long opportunities. And seasonally, Q4 is always the strongest quarter for defense companies. So the FY26 finish line could be spectacular. Okay, scorecard time. Let me be completely honest with you here. Business quality 5 out of 5. Seriously, IP-led, vertically integrated, 35 साल का ट्रैक रिकॉर्ड. इंडिया में इस कैटेगरी में बेटर कंपनी ढूंढना मुश्किल है. फाइनेंशियल हेल्थ 4 out of 5. Zero debt, 22% ROC, 25% net margins. -1 point only because of those 307 debtor days. Revenue visibility 4 out of 5. 1,868 crore order book, almost 2x annual revenue. FY27 की काफी earnings already visible है अभी से. मैनेजमेंट क्वालिटी 4 out of 5. QIP फंड्स R&D में लगाए, फैंसी ऑफिसेज में नहीं. कैपिटल एलोकेशन स्मार्ट है. वैल्यूएशन ओनली 2 out of 5. 75x PE पे ये स्टॉक एक्सपेंसिव है, फुल स्टॉप, इसमें कोई डिबेट नहीं. टेक्निकल सेटअप 4 out of 5. MACD पॉजिटिव, मूविंग एवरेजेस स्ट्रॉन्ग बाय, मोमेंटम बुल्स के साथ है. एंड ओवरऑल रिस्क रिवॉर्ड राइट नाउ 3 out of 5. बिजनेस वर्ल्ड क्लास है, बट प्राइस को आपके पास आना चाहिए. आप प्राइस के पास मत जाओ, यही टेंशन है स्टॉक में. Exceptional business, expensive valuation.
Now, who should actually be buying this and at what price? If you're a long-term investor with a 3 to 5 year horizon, this belongs in your portfolio. But don't chase it at all-time highs. The 3,000 to 3,100 zone is where I'd get excited. 2,600 to 2,725 is where I'd be buying aggressively. Use every correction as an opportunity to accumulate. If you're a medium-term trader, wait. Watch for a confirmed breakout above the 3,619.52-week high on heavy volume. If it breaks that level cleanly, the next targets are 3,800 and then 4,000 plus. Q4 FY26 results in May 2026 could be the trigger.
And if you're a short-term aggressive trader looking for a quick trade right now, honestly, look elsewhere. The near-term upside is maybe 2%. The downside with a beta of 3 is very real. This one rewards patience, not impatience.
So here it is, my verdict. Hold if you own it, accumulate if you don't, but only on dips. Data Patterns is arguably the finest defense electronics franchise in India. IP-rich, debt-free, 45% EBITDA margins, riding a decade-long policy tailwind. This is the kind of business you want to own for years, not flip for weeks. Bull case, if they hit their growth targets and the market re-rates them, 4,200 rupees plus. Base case, 3,700. Modest upside from here. Bear case, 2,800 if valuations compress in a down market. The trade is not at today's price. The trade is being ready with capital when it dips. The patient investor wins this one every time.
That's a wrap on Data Patterns. Full company, full chat, full verdict. अगर ये वीडियो हेल्पफुल लगा तो लाइक करो, सब्सक्राइब करो अगर और ऐसे डीप डाइव्स चाहिए. See you in the next one.